Now, in the midst of one of the biggest recessions in modern day history, due to unforeseen events rocking the financial and oil markets, opportunities have opened up for various greatly undervalued growth stocks. At this point, even top value growth stocks have been significantly reduced in value. Using the principles of value investing as well as dollar cost averaging can be hugely advantageous during times like this. With some of the principles you have already learned in this channel, such as having an emergency fund for at least 6 months and backup funds to deploy at great value investments, you are now better equipped to handle situations like what we are in now. In this video, I'll discuss 4 top growth stocks that you can invest in today, which have been massively undervalued and present great opportunities for huge appreciation over a short period of time and into the foreseeable future. Get ready! You are now entering the Academy. Early on, when the coronavirus broke out in the news at the beginning of 2020, the markets didn't care. People were treating this just as a Chinese issue, and US stocks continued to rally on the idea that it was a problem that would stay locally in China and within its borders. In the first 2 months of 2020, the S&P 500 rose by more than 5%. Then, the coronavirus went global and the US stock market started caring in a big way. For mid-February market highs, the S&P 500 has lost 18% of its value, a drop which included the index's worst weekly and daily performance since the financial crisis in 2009. The coronavirus is now a pandemic, but like all other major pandemics, this too shall pass, and hopefully relatively soon. Warmer weather, which tends to kill influenza-type outbreaks like this, combined with strict quarantining and wider distribution of potential treatments, will ultimately put this outbreak to bed within the next few months. Now, unless you have an immediate need for cash, there is no reason to panic and sell your stocks. Since 1857, there have been 33 recessions, and we will have many more over the next century. The good news is that these economic slowdowns haven't lasted very long. In fact, recessions in the last half century have been shorter on average compared to recessions prior to 1945. Over the last 75 years, the average duration of an economic downturn is 11 months. The economy always bounces back, which provides long-term investors with a chance to buy great companies at prices well below what they would sell for a growing economy. With that in mind, here are 4 great stocks you can buy today at discounted prices and hold for decades to come. First, we have Apple, ticker symbol APPL. Apple has been hit hard from multiple angles thanks to the coronavirus outbreak in China. First, the company closed all corporate offices, stores, and contact centers in mainland China. Second, many of Apple's suppliers in China have been ordered to reduce or altogether halt production. And finally, there are concerns that iPhone productions will now be behind schedule. None of this is great news, especially since China is a big part of the Apple growth narrative. But Apple will be just fine. This is true for a few reasons. First, the App Store will get a big boost during the outbreak. Consumers globally will increasingly stay home and spend more on mobile games and apps. Second, February typically isn't a big month for iPhone sales. Third, because an iPhone is a big ticket purchase, any lost demand during February won't forever disappear. It will just shift into March or April. Fourth, Apple's big iPhone launch comes in the back half of 2020. By then, the outbreak should be old news. It's also worth noting that Apple is reopening its stores in China because it appears that the worst of the outbreak is over. That's a huge positive for this company heading into the second quarter. All in all, Apple will weather the coronavirus storm just fine, and the company is still staring at huge growth potential in the back half of the year. Apple presents a great opportunity to enter here at $229 per share. Second, we have Alphabet, ticker symbol GOOGL. Alphabet has all the qualities of a business that will be around for decades. It is the second most valuable brand in the world, according to Brand Finance. It has services and apps that more than 1 billion people use every day, including Gmail, Google Maps, and YouTube. Plus, the company is extremely profitable, generating $31 billion in free cash flow last year, and it has $119 billion of cash sitting on the balance sheet. The stock looks like a good deal relative to most other blue chip stocks. The S&P 500 index currently trades at an operating price to earnings ratio of 19.5, whereas Alphabet trades at a ratio of 19 times operating earnings. Adjusting for Alphabet's huge cash hoard, the stock is even more attractive, trading at an operating PE of just 15.9. You're basically getting Alphabet's faster rate of growth at a better valuation. Alphabet saw its revenue per share grow 19% in 2019, while the average weighted growth in sales per share for the S&P 500 was just 5.4%. There has been talk about more regulation of the tech giants, including Alphabet, but this is still a great stock to own. Google offers tremendous value to users, and the COVID-19 outbreak proves how important the company's talent and capabilities are to benefiting society. Alphabet's other bet in life sciences, Verily, just launched Project Baseline, which is working to deliver COVID-19 testing in the San Francisco Bay Area. Additionally, Google is partnering with the U.S. government to develop a website to help educate people about the virus. Google Maps and Search will also highlight which schools or local businesses are closed. There's a lot more Google is doing to help inform people about the COVID-19 crisis, which just highlights the company's staying power. Alphabet would be a great stock to add to your investment during the current market sell-off. Look for an entry at under $1,000 and to purchase aggressively under $1,000. The third growth stock is Netflix, ticker symbol NFLX. Netflix has had a phenomenal run over the last 10 years. The stock has returned about 3,000% for investors over that time, but there are still plenty of reasons to buy and hold the stock for decades. Netflix is the poster child of the digital streaming era. It finished 2019 with 167 million subscribers. That number might seem to indicate it is reaching saturation, but paid memberships were up 20% year over year in the fourth quarter, and most of its subscribers are now coming into international regions. There is really no reason to think Netflix can't hit 1 billion subscribers someday. People love the service because of management's investment to build out an impressive collection of original movies and shows across every genre. That spending has burned a hole in its pocket, with free cash flow at negative $3.3 billion in 2019. But management's plan is to continuously improve free cash flow each year until it gets back to positive territory. With HBO, Viacom CBS, and NBC Universal launching their own streaming services this year, investors will need to watch the competition's effect on Netflix. But the growing number of paying members and a content library that continuously gets refreshed indicates that Netflix will be a winner for a long time. Netflix can survive the coronavirus scare and continue growing for decades to come. The fourth and final stock is Nike, ticker symbol NKE. The temporary pause in consumer spending is creating a real bargain in Nike stock. The company has a fast-growing digital business, but it is still very dependent on selling lots of sneakers and apparel at brick-and-mortar stores. Once the virus fades away, this top consumer brand will be rewarding investment from current levels for decades to come. The stock was selling at a forward PE ratio of about 36 times analyst earnings estimates before the market downturn. Now it sells for 23 times earnings estimates. Of course, those estimates are going to change due to the shutdown of stores across the country, but it still gives us a barometer of how cheap the shares are compared to where they would trade in a normal consumer spending environment. This is a top sneaker brand that was delivering solid revenue and earnings growth in recent quarters. In the fiscal second quarter, earnings surged 35% year over year thanks to ongoing work by the management team to improve margins. Of course, the most important thing you want the company to have in order to survive a recession is a strong balance sheet. Nike can weather the storm with $3.5 billion in cash, which is enough to offset its debt. Revenue and earnings will take a hit in the short term, but this iconic brand will recover and continue growing as it's done for the last 50 years. Nike presents a great entry here at $67 per share. By employing simple strategies emphasized in the videos of this channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk growth income portfolio that will appreciate over time and continues to pay income continuously through capital gains and or dividend income. Through careful planning and diligent investment of capital, as well as reinvestment of profits, one can create an income stream that can provide substantial income, eventually covering everyday expenditures and beyond. In this video, I provided 4 growth stocks that are greatly underappreciated as of March 2020, due to external events that in a short period of time should be completely eradicated. These growth stocks can be added to any savvy investor's portfolio, providing great returns in a relatively short period of time due to their undervalued nature. If you'd like to pick up some of these stocks now, make sure to check out the Webull stock trading app, which provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a growth stock portfolio using the methods mentioned previously. And if you join now, and upon your first deposit, you'll receive 2 free stocks valued up to $14,000. So make sure to take advantage of this promotion now. Be sure to check out the links in the description to get started on creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.